Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at MLC, and I'm joined by our Senior Economist, Bob Kinane. Welcome, Bob.
Thanks, Sinead.
Bob, it was another strong month for global share markets in November. What drove markets higher?
The market has taken the view that the trade deal between China and America will come through. So if we go back to October, we go back to the Oval Office in the White House, President Trump announced the trade deal with China as in a phase one agreement. Now, so far we haven't actually seen a signed deal. We've just been talking about it. But markets are taking the view that the deal is near. The second factor has been interest rates. So we've had an environment where the central banks have been cutting interest rates this year. So the American central bank has cut interest rates 3 times. Australia's central bank has cut a similar 3 times. Europe has also cut interest rates. And that's very supportive of the global share market.
So are they discounting some of the risks that are out there in the market and some of the political issues that are going on, such as the impeachment of Trump and Brexit and so on? Is the market just not factoring that in?
Well, the market is saying these are not material enough risks to damage the global economy and damage global corporate profits. That's an optimistic view at the moment because we still have concerns. One, that trade deal will not be signed, so there's just talk about that. The Brexit issue in particular, we've got a UK election on December the 12th, so it's still a great unknown whether Britain does exit from the European Union and on what terms it does so with a new government. We've also got the Hong Kong protest, which continue, so there's no signs that that protest movement has been assured by the Chinese government of its rights. So that's a longer term issue for China itself. So with these issues, the market has taken the view they're manageable, but we all know that these risks could become significant if there's a turn of events.
The Australian share market reached levels that we haven't seen since before the global financial crisis, so new all-time highs in November. And which sectors did particularly well?
Well, the Australian share market was up about 3%, and it's notable the outperformers were information technology, which is up more than 10%, and the healthcare sector was up 8%. And that's really driven on the low interest rate environment that we have in Australia. So if you looked at the cash rate, 0.75% after the Reserve Bank has cut 3 times this year. The 10-year government bond, so what rate the government can borrow at for the next 10 years, is nearly 1%. So we have extraordinarily low interest rate environment in Australia, and because of that, investors are particularly attracted to Australian shares.
So we've seen some subdued economic data in November out of the Australian market. What's happening there?
It's very much a case that the Australian economy is underperforming. So we've had a lot of disappointing data. So if we look at economic growth, in the year to September, it was only 1.7%. So that's a full 1% below where Australia should be growing at 2.7%. What we've also seen is the monthly data has been on the weaker side. So if you looked at car sales, they're down nearly 10% in the past year. If you look at housing construction, down nearly 24% over the past year. Retail sales are very subdued, so we're not going out there and shopping at Coles and Woolworths and alike at the moment. And the employment market is very mixed. So in October, we saw a fall of 19,000 jobs and the unemployment rate rising slowly to 5.3%. So the Australian economy needs more support, whether that be lower interest rates or more government stimulus or a combination of both.
Okay, what about bond yields? We've seen bond yields move up in November. Is that a reflection of the fact that we're not anticipating any more rate cuts?
Well, that's the case in America and Europe. So they're taking the view that if the trade deal comes through, the global economy picks up speed, there's no more need for interest rate cuts in America and Europe. However, by contrast, the Chinese economy is on the softer side, as well as Australia. So the bond market in both cases is taking the view the Chinese central bank, the Australian central bank need to cut interest rates further.
Thanks for your time, Bob.
Thank you very much, Sinead.
And thank you for joining us.